So this video is an interesting one. We're going to be talking about Nio. To the moon? If you guys been following this channel, I've been watching my videos for quite some time, you guys already know that I'm going all in on Tesla. So it's going to be interesting to see what the Chinese version of Tesla, which is Nio, going to perform. I mean, just by looking at their stock price for the past couple months, I mean, sheesh, look at that. Just decimated, destroyed, while Tesla's is holding out strong. But nonetheless, we have to look into see why Nio's case, why it's been dropping like this. Also, what the fundamentals are of the company, when they're gonna become profitable, because they're not profitable right now, and pretty much guess what the stock price, or speculate what the stock price is going to be every single year until 2030. But obviously using numbers from history and future growth from analysts. In other words, what will Nio stock price be in the next 10 years by 2032? Nio to the moon? Let's see. But first, make sure you smash that like button and subscribe if you haven't already. Let's start. Just so you guys know, I'm not a financial advisor by any means. I just have a lot of experience evaluating stocks and figuring out what their future stock prices will be, some of the times. Anyways, let's get down to it. So first, briefly, let's talk about the fundamentals of Nio. When we look at Nio as a whole, to put a long story short, it's a Chinese Tesla. Kind of like Hawaii, I can't really pronounce the name properly, to Apple, and Alibaba to Amazon, and WeChat to WhatsApp. Kind of like a copy and paste, you know? But looking further into the numbers, Nio is still not profitable. But they are beating delivery expectations and hitting records quarter after quarter and annually, so they are on the right path. Unlike other car companies. GM. But talking about growth, they have a goal to expand in Europe and other places in the world as going forward, which is very good. But the most interesting thing that I found about Nio that I find really interesting actually, and makes them different from other car companies, other electric car companies at least, is that they're working on autonomous driving. When you compare this to other electric vehicles like pure electric vehicle companies like Rivian, Lucid, they're not really doing the FSD or the autonomous driving. It's Tesla that's mainly doing it, and Nio is copying them. When I said the Chinese Tesla, I wasn't kidding. Although I don't believe Nio's autonomous driving technology is ever gonna be Tesla's, it's still in the developing stages and could be a strong alternative to Tesla's FSD. But we just have to wait and see. At the moment, Tesla is crushing full self-driving. Nobody, and I mean nobody at the moment, can compete with Tesla's full self-driving technology. At the moment at least. But besides their fast growth, their autonomous driving, their batteries, I didn't find anything else as their future plans. And honestly, they shouldn't. They need to focus on a few things at a time. Getting the company into profitability should be the main goal, but the question is when? Well, let's go and find out. So here's the Nio stock price chart for the next 10 years. Mind you, as you guys can see, this is all in US dollars. When you guys look at Yahoo Finance, it's in Chinese yen. So I converted everything to US dollars for our better understanding. But mind you guys, I'd make a note here, this chart is pure speculation. Because the company is not profitable, it's going to be very hard to figure out what the stock price is going to be. So we have to first figure out when they're gonna break even and then make a profit and then figure out the PE and so on and so forth. But let's go step by step at a time by explaining this chart. So as you guys can see here, we have the total revenue, we have the net income, we have the share price of 2021 alone, the rest of the years is obsolete. We got the shares outstanding, the price to sales ratio, which is important to figure out what the stock price is when they're not profitable. We got the EPS, and we have the predicted PE ratio. So pretty much what the PE will be, but that only comes into play once the company becomes profitable, but we gotta first figure that out when. So as we can see in 2021, they did $5.5 billion in revenue, then they did negative $1.6 billion in net income. Stock price in 2021 on the average was around 17.5 or $18 per share. Shares outstanding was about 1.6 or 1.7 billion. Price to sales ratio was over $10 at that time, which is just absolutely crazy. EPS of negative almost $1, and PE, there's no PE for that. But they had a market cap at that time of 30 billion, but prior to that, they had a market cap almost at 80 billion, which is just absolutely crazy. The speculation on that stock was just absolutely crazy. But let's go ahead and see what they're gonna do this year and a couple years after that. The best place that I found that predicts Nio stock price at the most realistic level was on simply Wall Street. All they had was from 2022 to 2024, and I added in this chart. So as we can see here, it seems like based on Simply's Wall Street, they're going to be breaking even sometime between 2023 to 2024, actually becoming profitable by end of 2024, which is quite interesting. But from 2025 and onwards, for the revenue and net income, it was really hard to find because no one's gonna predict 10 years in the future for the stock. But that's why we got this channel. That's why you got me to do it. So let's go ahead and let's get down with business. We can see the growth from 2021 to 2022 was about a 74% increase in revenue. Then it was a 69%, then a 38%. Same thing with the net income, but it's better. It's 50% better than the year before. So, well, negative 1.6 billion to negative 800 million. I mean, it's still negative, but they're doing good stuff. They're on the right path. And then 21%, and then we can see from 2023 to 2024, they finally break even and they become profitable. But looking at this, the revenue seems to be decreasing year over year. But I need more data to see what I can base the number on and predict the next few years. So what I did was that I took 2018 to 2021, the revenue and total net income, and this is what we get. From the sales point of view, from 2018 to 2019, we get an increase of 60%. Then we get an increase of 108%, and a crazy increase of 122%. So overall, almost 100%, 96% growth, which is absolutely crazy on the average. But the profits are a little bit different. From 2018 to 2019, there was a negative 51%, which is good because they're losing less money. Then from 2019 to 2020 was about another negative 51%. 2022 to 2021, there was a 90% increase, making it going from 850 million to 1.6 billion negative profit, which is quite concerning. But overall, it's a negative 4% in the net income, which is not really good. So going forward, revenue is going to continue going strong, but as the time goes on, as we can see from 2022 to 2024, it keeps reducing. So what I did was from 2025 to 2027, they're going to grow on a revenue pace of 30%. And then from 2028 to 2030, it's going to be 25%. And then 2031 to 2032, 20%. And this is the number that we get. By 2032, we get 137 billion in revenue. But the most important thing is that the net profit. Let's go see what the net profit is going to be. Based on simply Wall Street, they're saying that they're going to break even and make a profit in 2024. But the thing is with Nio is that they have a lot of debt and they have to pay a lot of it back, and not to mention interest rates are going up, so they have to pay a lot more. So what I did was to keep conservative, and obviously we're being speculative here, is that every single year, starting from 2025, I increased the profit margin by 1%, starting at 4%. So in 2025, I said 4% of the total revenue is going to be net income, and then 2026, 5%, and then 6% year after, 7%, 8%, 9%, 10%, 11%. Just to keep things conservative and keeping it realistic and being safe at the same time. Let me know if you guys agree in the comments below if this is the right net income for Nio. Curious to know what you guys think. So overall, using this mechanism, by 2032, they should have about 15 billion in net income. Then we got the shares outstanding here. If we look at the chart for the shares outstanding, they've been diluting like crazy. Just look at the chart, which makes sense because they're not profitable and they have to come up with the extra cash somehow. So they dilute shares. So to make things easier, I made this chart here. Every quarter, I put what the shares outstanding was to find out the quarterly average and the yearly average. Quarterly average is about 3.7%. They keep diluting, which is a lot. That's a lot. But on the yearly average, it was nearly 20%, which is just absolutely nuts. What I did was to keep things conservative is that in 2022, I said they're going to dilute 5%. And then from 2023 to 2025, that they're unprofitable or starting to become profitable, they will dilute 10%. And after that, from 2026 to 2032, they'll dilute 5% every single year. So with this, we get over 3.28 billion in shares outstanding by 2032. Quite a lot of dilution. Now, the price to sales ratio is very important when it comes down to the stock price, because when the company is unprofitable, it relies on the price to sales ratio to figure out what the stock price is. Kind of like what the PE is when the stock is profitable. But in 2021, the price to sales ratio was over 10, and that gave it a stock price of 18. But looking at the current price to sales ratio at the moment, it's kind of below 4, at 4. So for 2022 and 2023, I put 4. For 2024, we're not gonna put any price to sales ratio because they're making a profit. This will be based on the PE. Speaking about the PE, by 2024, I put a PE of 200. Why? Some of you guys may say that,
oh, wait a minute, man. Tesla, when they made a profit, they had a PE of almost 1,500.
Well, that's Tesla. Tesla is a unicorn. They're the first type of its own business of EV to ever be in the market. They're the ones that pretty much changed the entire auto industry. Nio, again, is just a copy of Tesla. So I don't expect it to hit 1,000 PE. I'm gonna give it a PE of 200. And then the year after that, 100, and then 90, 80, 70, 60, 40, until the 30 PE. That's the benefit of being a unicorn, or the first of it in your own market. You get to reap all the benefits first. When a copy comes along, it's not that exciting. So the PE given and the price to sales ratio, this is the EPS all the way. And we can see by 2032, a PE of almost $4.60. All right, now moving on to the stock price, where we all been waiting for. But before we do that, have you smashed that like button, man? Why have you not smashed that like button? Come on, man. So the stock price in 2022, if they do almost 10 billion in revenue, and if they do very well in their net income, which is half, negative $800 million, which is still bad, but better than 1.6 billion, we can expect the stock price hitting 22 bucks per share with a market cap of $38 billion. Now again, that's a price to ratio of 4. If that increases, the stock price will be a lot more. For example, if people get optimistic with Nio and they buy a lot more, the price to ratio can go to 5, which the price will go to 27, or 6. Price could go even to 33. But we're gonna keep it at 4 just to be conservative. We're just speculating and guessing what the stock price could be, because again, they're not profitable at this moment. In 2023, if they do 16 billion in net revenue with a net income of negative 200 million, which is better than negative 800 million, so they're doing really good. If they do this with a price to sales ratio of 4, we can expect the stock price to be $33 and a market cap of 64 billion. So that's not bad. People are getting more optimistic now. 2024 is interesting because that's when we actually break even and make a profit, and that's where the PE comes into play. Now, let's see what the stock price is going to be. So if they do 22 billion and if they do net income of 400 million in 2024, with a PE of 200, we get a stock price of 35 bucks, which market cap of 64 billion. Mind you, the market cap is growing a lot faster than the stock price only because the shares outstanding is being diluted big time. That's the only reason. But we get a stock price potentially at 35 bucks, but it could also be 40. We don't know. Hype can come into this. We can see the PE reaching maybe 250, which will give it a stock price of 44, but we're gonna say 200 at 35 bucks per share. In 2025, with a PE of 100, it's about 49 bucks per share. In 2026, with a PE of 90, is 69 bucks per share. 2027, with a PE of 80, is 91 bucks per share, which, by the way, almost of $250 billion by 2027, which is just crazy. 2028, a stock price of 110 with a PE of 70, market cap reaching almost 300 billion. 2029, with a PE of 60, we get a stock price of 129. 2030, with a PE of 50, we get a stock price of 144 bucks, market cap of 428. 2031, with a PE of 40, we get a stock price of 146, with a market cap of 456 billion. Again, that's because the dilution is high with the shares outstanding. They may not dilute 5% yearly at that time, but we're just keeping things conservative. And in 2032, with a net income of 15 billion, with a PE of 30, we get a stock price of 138 with a market cap of 452, which is interesting because it seems to be going down now. This is how the chart looks like. As you guys can see, by 2030, 2031, the stock price is starting to dip. They pretty much finished their S-curve. But this makes sense to me because by 2030, we can expect the gold rush of EVs will slowly die out. Now, one thing to note is that this is not including Nio's battery, nor is this including Nio's autonomous driving, which we don't know how they were planning to sell that. But most likely, they're gonna copy Tesla's subscription or one-time fee. But we don't have that data yet, so we can't speculate that at the moment. But looking at the chart, we can suspect that by 2030, the gold rush of EVs will slowly start to die down, and this could be true with Teslas, but their FSD or the Tesla bot or the robo taxis that they have so much in store could really bring that up and go higher. But with Nios, we don't know that yet, but we can speculate and guess and make an intelligent guess that if they just work on pure cars alone, we can expect by 2030 and onwards, the stock will start to dip because they finished their S-curve. So the best time to buy Nio stock based on this scenario, on this exercise that we're doing, this model, is by end of 2023 or beginning of 2024, and the best time to sell it is by 2030 before it starts to dip. That's the best time. That's what this model is telling us. But again, this is all a prediction, all speculation at this point, and this should be taken with a grain of salt. That's it. Maybe Nio will never make a profit because Tesla will continue to crush it and the market share will prefer Tesla than a copy of it. And at the same time or not, Nio's debt continues to grow big time, interest rates keeps going up, and they have a lot harder time making the company profitable, thus making them move forward faster, less likely. Nobody knows. This is a prediction. We just have to wait and see. Now, my biggest concern with Nio at the moment is the profitability part. Simply, Wall Street estimates that they will be profitable in 2024, but I'm a bit skeptical of that. At the moment, Nio has a total debt of $3 billion. When you convert the Chinese yen to US, it's around $3 billion. Now, I wouldn't be worried if they had this much debt when they were profitable, but they're not. And on top of that, interest rates are going up and they continue to pile on more debt. So it's not a good situation, and I don't believe they'll be profitable by 2024 for these reasons. If you compare this to Tesla, they only have $7 billion in debt, but they are 33 times bigger than Nio, and they're profitable. But that's my only concern with Nio, their debt, the interest rates going up, and them piling on more debt. This will delay their profitability. Now, should you buy Nio stock or go all in? Well, based on the stock price prediction chart, I wouldn't at the moment. Right now, the Feds are increasing interest rates, which will delay their profitability status for some time, and hammer the stock in the meantime, all at the same time. At the moment, Nio stock is a speculation, but a lot less than a year ago. We will witness the stock being low for some time unless they start coming close to profitability. Then it'll be a good time to buy some shares. Think of Tesla back in 2019 before it mooned. Unless Tesla has already destroyed the market, but we don't know that yet. But I don't think we will see Nio mooning like how Tesla did, because Tesla was a unicorn and Nio isn't. It's just a copy of Tesla. But why invest in the Chinese Tesla when you can invest in Tesla itself? In fact, check out how many shares you need right now to retire off Tesla. Man, the amount, sheesh, it will surprise you. But check it out, guys. You'll enjoy it. Everybody enjoyed it. The video kind of blew off for some time, but check it out. You'll enjoy it. Don't forget to subscribe, guys, and I shall see you guys in the next video. See ya.